Hi everyone, my name is Robin Speziale, and I'm the national best-selling author of a book called Market Masters. You can buy Market Masters on Amazon.com or .ca, or you can go to your local library and pick it up there. So in another video, you can look it up. It's how to discover a new stock. So I talked about the discovery process. So how do you go about identifying what are the interesting, intriguing companies that one might invest in? And so this video, I'll be talking about once you have a watch list in place of, let's say, 50 to 100 stocks that have intrigued you, that the numbers do look good at first glance. How do you actually drill down on these companies? How do you qualify these companies further? So you go from 100 companies in a watch list to maybe, a potential list of 20 companies that you might actually invest in. And so this is what I call, the qualification process, how to qualify, how to analyze companies. And what I do, there's multiple sources. So to start the research process, I would go on each and every company website. So if you have 100 companies in your watch list, go on other websites, and you'll find a investor relations page on every company site. That includes, like facts about the company. They have other quarterly annual filings on there, and other things about the company, the management board of directors. Also go on stockhouse.com. Some people don't like Stockhouse, but they have some forums on every company, and some of the research is pretty good. People are discussing the companies. Just watch out for any, promoters of stock. Definitely avoid them and don't take their advice. Go on Twitter. Twitter is an amazing resource for investors. There's so many great micro, small cap, mid cap investors on there, and they share their ideas, and sometimes they share research. Some of the news that they post on there, they'll retweet press releases from companies, and it's just a great treasure trove of info on Twitter. Go on Google, type in the company name, you'll find press releases there, you'll find some blog posts from some smart investors. And what I also like to do, I like to go on Whale Wisdom. You can go on Whale Wisdom, and you can see, or you can go on, there's another site called Datorama, I believe, and you can type in the stock, and you can see which other hedge funds or mutual funds actually own that stock. And you can go on to Morningstar, you can type in names of mutual funds, you can see if they hold the stock in there as well, and it just kind of helps you to validate your stock idea. You can go on YouTube as well. It's important to research management of companies. It's hard for a do-it-yourself investor to pick up the phone, call the CEO and ask him or her questions. But on YouTube now, what I'm finding is there's a lot more interviews with CEOs of companies, and you can learn more about the CEO, their character, the vision for the company, what they've done in the past, and it's just a great treasure trove of info. And it's important to do your own primary research. What I mean by that is, let's say there's a company like Organic Garage, or there's a company like Nike, which is so well known that you don't have to do that research. But if it's a storefront, you can go visit the storefront. If it's a product that you can buy, on Amazon for $29, buy the product, test it out. And these are all the different types of steps you can take to actually become very intimate with the company. And the same with a service company. If it's a service, you try to make sure you actually understand is there value in that service you're selling. Now, here are the questions that I ask myself for each and every company. And these are questions that can help guide you through identifying, are these actual meaningful companies? Is there a growth potential in these companies? And I'm just going to go through all these questions that I'll ask. So the first question is, what are the products and services this company is selling? Does this company offer something new, unique to the market? Is there a new technology? Would anybody be unhappy if this company went out of business tomorrow? Would I use their products or services? Is there lasting utility and appeal? Another question is, who is running the company? Is it an owner operator, or is it like a new CEO who's installed? Is there a bold vision for the company? What is the CEO's track record in leading other public companies and executing on a vision? Especially with small companies, it's really, it's more important to look at the jockey than it is the horse. The CEO is the person with the vision. If he executes on the vision, then he can definitely deliver some good shareholder value, hopefully. Look at insider ownership. Look at insider holdings of the company. Is management actually buying stock? Do they hold stock in the company they actually run? Do they have faith in the company? Is management overpaying themselves as a percentage of revenue? Like, you don't want them just using the company as a cash cow, pulling money out of the company and leaving shareholders holding the bag at the end of the day. How big is the addressable market? Okay, so is there a runway for growth in this company? Can the company scale to expand and fulfill demand for its products and services domestically and globally? Can it achieve profitable growth? How easy will it be to acquire and onboard new customers? Another question, what is the business model? Are revenues repeatable and recurring? These are the companies I love, like software as a service companies that their revenue is generated through subscriptions. Or is the company revenues inconsistent and cyclical, like manufacture of oil and gas tanks? When a recession happens or when there's a crash in the price of oil, there's not as many companies producing oil. A lot of these junior oil companies go to business and the demand just evaporates from there. Are profit margins good? How will profit margins improve? Is the company structure, workforce, and sales/marketing group in place for the company to succeed? Another question, is the company vulnerable to business cycles? What would happen in a recession? And you can look on Morningstar. If you go to Morningstar, type in a company name, and go back to 2008, 2009. How did the company do in a recession? Did revenues drop considerably, or were they still selling their goods through recession? Like, for example, in Netflix's case, I don't foresee people canceling the Netflix subscription even if they lose their job or if there's a recession. Entertainment is really everlasting in that sense. Does the company have ample net cash on hand so that they're not vulnerable to economic down cycles, just in case something happens in the future? Can growth be funded through its own operations? What is the capital structure? Another question is, does management have a focused acquisition plan? Have they successfully integrated complementary companies? Is the industry in which they operate fragmented? And so is there an opportunity for this company to consolidate smaller companies? Are there positive tailwinds? Are tailwinds anticipated in the future? For example, elder care. Or previously it was cannabis. Cannabis was a huge tailwind. The legalization of companies and licensing of these big corporate entities that are now selling marijuana to consumers. Another question is, what is the regulatory environment? Can regulations dampen the company's growth? Conversely, could regulation bolster company growth? Like the other example, cannabis industry. Does the company have sufficient cost controls in place? Are they managing costs? Will the company innovate? What's the culture? Like we saw what happened with Research in Motion, who was largely a one-trick pony, and they weren't innovating. What is the current research and development spend of the company? Does the company plan to expand its product and service selection? Can the company achieve a competitive advantage, or what Buffett calls a moat, and fend off any competition? Is there competition? If there is there room for multiple players? Does the company own any intellectual property? What are the switching costs? Is moving to a competitor easy? Who is promoting and supporting the company? Like, you don't want to get into a stock where, especially the small microcaps, a lot of them, I've seen, there's pumpers of the stock, there's promoters that'll pump it up and then sell it when it gets high. It's just ridiculous. It's a ridiculous practice. A lot of these guys should really be, behind bars, to be honest. Is it underfollowed by analysts? Is it under-owned by institutions? This company, it's always great to discover these undiscovered companies that could potentially grow bigger. What is the daily, weekly share volume? You want to see companies that have some good share volume in it, because if there's low share volume, companies can be very volatile, meaning there's going to be large swings up and down. Excuse me. Can a Chinese or other low-cost competitor simply produce these goods and services cheaper? Or does this company have a following? Does it have a brand or a better way of making the product or delivering the service? Can a bigger company like Amazon catch on to this opportunity and easily steal market share? Is the price validating the company's positive developments? Like, so for example, if the company releases a good quarterly revenue figures, earnings per share is up, does the stock actually follow that? Does it go up? Is there positive momentum in the stock chart? Does the company have any prominent short sellers? For example, Mark Cohedes, Andrew Left, Carson Block. If so, do you believe the short thesis? Have you considered the worst case scenarios for the company? Finally, can this company grow 3 times bigger? Can it go from like 100 million to 300 million market cap? Can it go from 10 billion to 100 billion in market cap? Is there growth potential? Can the revenues grow for years to come? Can the company attract a bigger and loyal shareholder base? These are all the questions that I ask myself. There's more that you can tack onto this, but it just helps a do-it-yourself investor qualify companies, and from there you can start moving companies from that bigger watch list and to a smaller list of companies that you can say, hey, you know what, I'm a little more comfortable with this smaller list. I've done my research, I like these, and you can conduct some more research and possibly invest in those companies in the future. I hope you enjoyed this, guys. Talk soon. Happy investing. Bye.